Hey everyone, welcome back to Corporate Decoder. Today, Trump Media and Technology GRP announces first quarter results, and I am seeing a key warning sign that tells a story. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company just dropped its latest financial report, and while there are a few numbers to look at, one thing really jumps out at me about their financial health. So this filing is a current report the company's put out to tell investors about big events. In this case, Trump Media and Technology Group Corp is announcing their financial results for the quarter that ended on the 31st of March 2026. They've released a press release, and that is what this filing is really about. The report itself is dated May 8, 2026, which is the same day they are announcing these results. This is all about Trump Media and Technology Group Corp, which is the company behind Truth Social, and it is traded under the ticker symbol DJT. Now, let's look at the securities they have registered. They have common stock, which is what most people think of when they invest in a company. They also have these things called redeemable warrants. Think of them like options that give people the right to buy a share of common stock at a specific price, in this case $11.5 before a certain date. They're common stock, and these warrants are traded on stock exchanges, and we see them listed on the Nasdaq stock market, LLC. Interestingly, their common stock and warrants are also listed on the New York Stock Exchange, Texas, and the Nasdaq. This might be a typo in the filing, as the NYSE does not have a Texas listing. The main reason for this filing, as highlighted in item 2.02, is to report on the company's financial and operating results. So on May 8, 2026, the company put out a press release about how they did financially in the first 3 months of 2026. This is important because it gives us a snapshot of their performance. Then we have item 9.01, which is about financial statements and exhibits. This is where they attach the actual documents that show the numbers. The key document here is Exhibit 99.1, which is the press release itself, dated May 8, 2026. This is where the meat of the financial information is. Finally, at the end of the report, we have the signature section. This is where the company officials sign off confirming that the information in the report is accurate to the best of their knowledge. In this case, Scott Glabe, the General Counsel and Secretary, signed on behalf of the company. Now, let's dig into the press release mentioned in this filing, because that is where the real story is. Al Jazeera reported on May 9th that the parent company of Trump's Truth Social site reported a $400 million loss this year. This gives us some important context as we look at the numbers in their official filing for the quarter ended the 31st of March 2026. While the filing itself doesn't show the full financial tables, the press release it references is where we get the key figures based on how these reports typically work. The press release would contain the actual revenue, profit, or loss, and other important financial metrics. Unfortunately, without the content of Exhibit 99.1 directly in this filing, we have to rely on the news and our understanding of what these filings represent. What this filing does tell us is that Trump Media and Technology Group Corp is reporting its first quarter results for 2026. The fact that they are issuing an 8K report specifically to announce these results means the market is watching these numbers closely. The context from the news about a potential $400 million loss for the year is a significant red flag. Companies that are losing this kind of money are under a lot of pressure. They often need to raise more capital, which can dilute existing shareholders, or they might face challenges in keeping their operations running smoothly. Looking at the structure of this filing, it is important to remember that an 8K is for reporting major events, and announcing financial results is definitely a major event. The crucial part for investors is always the financial details, which are typically found in the attached press release or exhibits. Given the external reporting of a substantial loss, the actual numbers released in the press release will be critical. We will be looking for the revenue generated, the cost of running the business, and ultimately the net income or loss. If the $400 million loss figure is accurate for the year, it is very likely that the first quarter itself showed significant red ink. This kind of financial performance can put a company in a precarious position. Think about companies like Bed Bath & Beyond or Rite Aid, which face similar financial struggles. They had to make significant changes to survive, and often investors saw their holdings decline substantially. While DJTWW is not in that exact situation, a pattern of large losses is a serious concern. For Trump Media and Technology Group Corp, the question becomes sustainability. Can they generate enough revenue and control their costs to eventually become profitable? The significant losses reported suggest they are currently facing a major uphill battle. Or how quickly the company is spending its cash. Large losses mean they are burning through cash, and if they don't have a clear path to profitability or a way to raise more money, the future can look very uncertain. Investors will be scrutinizing the cash flow from operations in the full financial statements. What I am actually looking for is a clear strategy to turn these losses around. Without that, the current financial results will continue to be a major overhang for the stock. Alright, that is my take. Stay decoded. If you want to see how I break down these filings, the research tools I use are linked in the description. Like, comment, subscribe, and join our Discord.